Hey guys, how's it going? Today I'm going to be talking about the Coca-Cola of foam shoes. You can often tell how successful a product is by how many imitations there are, and despite a lot of people hating on Crocs, every other brand seems to be trying to imitate their success. However, there's one problem for them. They are not Coca-Cola. I like these shoes so much that I literally wore them every day for 5 months traveling around Asia. And despite them being a bit dirtier and definitely worn down on the heels, I honestly can't believe how good these shoes look after that trip. And I'm literally still wearing them while recording this video. So in this video, I will not only be talking about Crocs, a stock that I think is deeply undervalued, it is also the largest position in my portfolio. Feel free to go check out my portfolio. It's in the link in the description. So let's get into it. Why are Crocs so great? The unique business model and the fantastic financials. If you're wondering why these shoes have become so popular recently, the shortest answer I can give you is the pandemic. In 2017, they got a new CEO who implemented a better management. System and also started managing the products better and the site better and the brand better. That, combined with the fact that everyone started working from home from 2021, led to an explosion in sales. But what I find super interesting and why I like the stock is the fact that since the pandemic, sales have remained high, and on Google Trends you can see it's actually at the highest point in 5 years. So I think we need a better explanation as to why Crocs are doing so well, and this is it. They are f***ing awesome. Firstly, they're more comfy than other brands, they are cheaper than other brands, and they last far longer than other brands. And so while some people love to hate Crocs, there are many people like me who love to love them for all of these reasons I've just mentioned. I honestly can't believe how good these shoes look after 5 months traveling, and I can't imagine any pair of shoes for 40 bucks that would look this good after a trip like that. Okay, so that's the basics. We've covered the clog. Now let's take a deep dive into what sets Crocs apart from the pack. This is the kind of innovation that tech enthusiasts get excited about. We're about to unravel the behind-the-scenes magic, the disruptive business model that's turning heads and reshaping the game, the thing that makes Crocs the Coca-Cola of shoes. And the thing is so obvious. It's a foam clog that uses almost no manual labor to produce. And on top of that, their stock doesn't spoil ever when sat on a shelf. And on top of that, there's the 𝗦𝗫𝗍𝒽 business, which I can tell you, speaking from experience, having worked as a product designer for 5 years and working with a factory in China, these things cost less than 5 to 10 cents to produce, and they go on to sell them for £5 a piece. Crocs is just way ahead when it comes to making money in the shoe industry. Put simply, all costs included, for every product they sell, they keep 20% of the profits. That might not seem like a lot, but it's huge. By comparison, other big brands like Nike are only keeping 10% of their profits, and Adidas a measly 3.2%. This shows us that Crocs are doing really well in managing their costs and, more importantly, making money from their products. Now let's talk about the numbers that matter. Imagine if you invested in Crocs. Right now we use a number called price to earnings, and for Crocs that's currently at 9. Think of it like this: if Crocs don't grow at all, it might take around 9 years for your investment to become what you put in. By comparison, if you wanted to achieve the same thing for a savings account, it would take around 10 years at a 7 to 8% interest rate. So you're not going to find that in a savings account. And that's assuming no growth and no inflation. And so what we need to do now is look at what the potential growth could be. As we said, Crocs don't need to grow at all to be worth investing in, but the exciting thing is Crocs are growing, and like really quickly. Crocs are hitting Asia hard, and they have grown 40% in Asia just in the last year alone. Better than that for me, I've just traveled to Asia, and I can tell you firsthand that I've seen them in Vietnam, Cambodia, Australia, New Zealand, every single country I've been to. The kids are wearing them, the adults are wearing them. Crocs are literally everywhere. And that's why it's also reflected in the numbers. Revenues in Asia have grown 40% in the last year. This is a growth stock at a huge discount. There is just one risk. The acquisition of HeyDudes left them with $2 billion in debt. So all I can say on this is that they seem to be aggressively paying off this debt. Over the last 4 quarters, they paid $250 million each quarter and still had free cash flow. Specifically, they had $500 million free cash flow in the last 12 months. A lot of people at the time said that $2 billion was a lot of money to spend for HeyDudes, but just remember they bought that at record low interest rates. So even if they locked in for just 2 years, that debt will be extremely cheap. They continue to pay $250 million each quarter. They'll soon be at their long-term goal of 1 to 1.5 leverage. When that happens, their debt liability will go down to pre-2022 levels, which is around $100 million in interest payments each month. Currently, it's sitting at $250 million, so potentially in about a year to 2 years' time, they will have an extra $150 million in free cash flow. This is why I love Crocs. They are a cash cow, and it's why I believe them to be the Coca-Cola of shoes. But do you agree disagree with me. If you have an interesting opinion on this, please put it in the comment section. Let me know what you thought of this video, and remember to like and subscribe. Have another cup of tea and edit this video. And that will be me for the day. All right.